1 in 2 Singaporeans who live past age 65 will experience severe disability. Scary? Yeah. That's why knowing your long-term care options like ElderShield and CareShield Life is important. In this video, we'll go through what ElderShield and CareShield Life are, the key differences between them, and whether they are enough for your long-term care needs. Let's get to it. Hi, I'm Fer from Dollar Bureau, a personal finance platform that talks about insurance, investments, and financial planning. Firstly, what is ElderShield and CareShield Life? ElderShield and CareShield Life are both long-term care insurance plans. They're designed to give you monthly payouts if you become severely disabled, which just means if you can't perform at least 3 of the 6 activities of daily living, like washing, dressing, feeding yourself, moving around, or transferring. If you're in that situation, the payout helps with things like caregiving, equipment, or home care support. They're not meant to fully replace your income or cover everything, but they're there to help ease the financial load. Now, let's look at how ElderShield came first and how it led to CareShield Life. ElderShield was launched back in 2002. If you had a Medisave account and turned 40 at that time, you were auto-enrolled unless you opted out. There were 2 versions, ElderShield 300 and ElderShield 400. The 300 plan paid $300 a month for up to 5 years, and the 400 plan paid up $400 a month for 6 years. The payouts are fixed and the coverage lasts for a limited time. Premiums were relatively low and you paid up only until age 65, but it also didn't cover those with pre-existing conditions. If you want to learn more about ElderShield, how it works, who's on it, and how to check your status, I'll include in the link in the description below. Then, in 2022, ElderShield was upgraded into a newer scheme called CareShield Life. CareShield Life kicked in for those turning 30 from 2020 onwards. So if you're born in 1980 or later, you are automatically enrolled when you turn 30. No action is needed. The payouts starts at $600 a month and grow by 2% every year until 67 or until a successful claim is made. So your coverage actually keeps up with inflation. And here's the key part, payout lasts for life, not just 5 or 6 years like ElderShield. Premiums are higher and you pay till age 67. But you're also getting lifetime support and it covers those with pre-existing conditions too. There are also government subsidies available, especially if you're in the lower or middle income range. And if you want to learn more about CareShield Life, including subsidies and how to check your coverage, I've covered it in another video, link in the description. Alright, now let's compare both side by side. What's the actual difference between them? With ElderShield, you're getting a fixed amount, either $300 or $400 per month, and that lasts only for 5 or 6 years. CareShield Life starts with a higher payout, and that amount increases every year until you reach 67. And the best part is the payouts are for life as long as you meet the criteria. ElderShield premiums are lower and stop at age 65, but again, the benefits are more limited. CareShield Life premiums are slightly higher and go till age 67, but in exchange, you get more comprehensive coverage. Another difference, ElderShield doesn't cover pre-existing conditions, but CareShield Life does. And while ElderShield was optional, CareShield Life is now mandatory if you're born in 1980 or later. So now that you know the difference, the next question is either one actually enough for your needs? Here's the thing, it really depends on your situation. Yes, both schemes give you some support, but long-term care in Singapore can cost anywhere from $1,200 to $4,500 a month. So if you're getting $400 from ElderShield or even $600 plus from CareShield Life, it might not stretch very far, especially if you need full-time care or staying in a nursing home. That's why people consider getting extra coverage. You can look at supplements for either ElderShield or CareShield Life from private insurers. These top up your payouts and give you more monthly benefits and claiming upon 1 or 2 ADLs. This is highly recommended, and not only because you get paid more or can have lower claims criteria, but also because each person that's eligible can use $600 per year from their Medisave to pay for these supplements. So go and make sure your CPF Medisave is put to good use. And there's also disability income insurance. This one's a little bit different. Instead of helping with just care costs, it replaces part of your income if you can't work due to illnesses or injuries, even if you don't meet the severe disability criteria. Both options help close the gap and give you better protection in case something happens. Okay, before we wrap up, here's one question that we always get. Can I have both ElderShield and CareShield Life? Short answer is nope, you can't have both at the same time. Once you opt in into CareShield Life, it fully replaces ElderShield. But the switch isn't automatic unless you're born in 1980 or later. If you're older, you get to decide whether you want to upgrade. Alright, let's wrap this up. Both ElderShield and CareShield Life give you a basic safety net, but CareShield Life is more updated, has higher payouts, and gives you lifetime support. Still, it might not be enough on its own. If you want better coverage or more peace of mind, it's worth looking into supplement plans or disability income insurance. If you want to learn more about CareShield Life and ElderShield, you can speak with one of our financial advisors. I'll include the link in the description below. If you enjoyed this video, don't forget to like, share, and subscribe for more practical financial tips. Thanks for watching. I'll see you in the next video.